Most traders are reading volume completely wrong. They think a green bar means buying and a red one means selling. That's not how it works. And that misunderstanding is costing them trades every single day. So today, I'm going to break down the correct way to read volume, including the one mental model that explains 80% of what volume is telling you on any chart at any time in any market. And stick around to the end of the video. I'm going to give you a 5-question checklist that you can use before every single trade to make sure you're never misreading volume ever again. Hi, I'm Jacob Wade, and I've been investing for over 20 years. And I'm currently a partner at WallStreetZen.com, where our quant team analyzes over 4,600 stocks daily. And if you like simple breakdowns of key trading concepts like this, please hit the like button below. It tells me to keep making more of these. So let's kill the biggest myth in volume analysis right now. Green volume bar does not mean buying, and red volume bar does not mean selling. Every single trade requires both a buyer and a seller. What volume does is it counts transactions, not which side you're on. The bar color simply follows the candle color. That's all it's doing. So here's the corrected rule. Ignore the color of the volume bar entirely. What you're looking for is the size of the bar combined with where the candle closes. That's where the real information lives. And by the way, I'll be showing some charts in this video. I'm using a platform called TradingView, which I highly recommend. You can scan the QR code on the screen right here to check it out, or just click the link in the description below. Now, everything in volume analysis comes down to one simple framework: effort versus result. Now, effort is volume, the energy and capital being deployed. The result is the candle you see, how far the price actually moved in response to that volume. Now, when they match, the move is genuine. And when they don't match, something else is happening there. So imagine pressing your car's gas pedal, going hard uphill, and you're barely moving. It's the same effort, but a much smaller result. That tells you there's resistance. Something is absorbing that move. So here's a simple volume matrix, 3 combinations that you can memorize so you can easily wrap your mind around how this works. So high volume plus a big candle on the chart equals a genuine move. There's real participation behind this move. Now, high volume and a small candle on the charts is called absorption. There's massive effort, but the price goes nowhere. Someone is on the other side soaking up every share of that trade. Now, the last one is if you have low volume, the price is still moving up, there's no opposition. The price is drifting, but it's not really being driven by anything. So treat that with caution. Now, those 3 frameworks are the foundation. So let's apply it to 3 specific patterns that you might actually see on some charts. So pattern number 1 we're going to look at is stopping volume. So this stock here is in a sustained downtrend, and there's panic everywhere, but one candle kind of stands out. If you look over here, there's a big red candle, the highest volume you've seen in weeks, but the close is near the middle of the candle, not the bottom. And if I scroll over here, you can see the candle went way down, high volume, but then it closed near the middle of the candle. Now, a big red candle like this, but also bumping back up and closing in the middle, tells you someone with serious money stepped in and bought everything that panicking sellers were dumping here. They stopped the crash with their own capital. High effort, but a small result. Absorption, the bottom. Now, this is not a buy signal on its own, but it's a warning to pay close attention. And of course, as you can see, the stock went on to continue to bottom and then eventually reversed the trend. All right, pattern number 2 is called a buying climax. The price has been rising for weeks on this stock, for example, and retail is now piling in. And then what you see is a massive green candle here, huge green candle. And then it kind of, again, comes back down and closes in the middle. The plot twist here is this is not a strong buying signal. That's a strong selling signal disguised as buying. Smart money built their positions quietly over weeks and months. And now as retail floods in at the top, they are handing them a wall of buy orders to unload into. The moment you FOMO into this is often precisely when smart money is walking out the door. And again, as you can see, this is confirmed if you scroll over, selling, and eventually the price continues to drop. The extreme volume spike there is your warning, not your green light to hit go. All right, pattern number 3 here is called the no supply test. So After an uptrend, as you can see in this stock here, there's a slight pullback. The traders start to worry, but if you look at the actual volume, the red candles, other than this one, are pretty small. Basically, the market is asking, does anybody want to sell here? And low volume answers clearly. Not really. The sellers are absent, and the uptrend actually has a higher probability of continuing. And again, if you scroll over, you can see, yep, not a lot of sellers, so the uptrend continues and continues. Now, this is one of the most reliable confirmation signals you will find, and the best starting point if you're new to volume analysis. Okay, if you're liking what I'm saying so far, please hit the subscribe button below. In addition to tutorials and lessons like this, we also share a ton of great stock picks, so you can get stocks and learn the best of both worlds. Again, hit the subscribe button below. Now, let's look at volume divergence. Now, when price and volume agree, the trend is healthy, but when they diverge, that's your early warning something's about to change. The most important signal, price making new highs while the volume bars are slightly getting smaller. Think of a rocket. At launch, the thrust is enormous, but as the fuel burns, the thrust weakens, and eventually the rocket fails. Not because something hit it, but because it ran out of fuel. That's exactly what declining volume during an uptrend looks like. So if you take a look at this stock, for example, you have a good amount of thrust at the beginning and the price starts to go up and it's slowly trending up, but the volume is getting smaller and smaller. And eventually you can tell it peters out and then the price decides to decline. Now, the reverse of this is also true. So if the price is falling, but the volume is shrinking over time, that means that the sellers are exhausting themselves. So each leg down has less participation and bottoms are often formed this way. So if you take a look here, the bottom formed and then it came back up because the sellers were just exhausted and the trend reversed. So volume divergence itself won't tell you exactly when the move ends, but it does tell you that the move is running out of fuel before the price chart shows any signs of it. Now, here's where this gets practical beyond the chart. WallStreetZen's Zen ratings include a momentum component grade that does a lot of this volume-based analysis for you automatically. It evaluates 22 momentum factors, including volume-weighted momentum, which measures price trends with the added weight of trade volume, and share turnover, which tracks how frequently shares are being traded as a reflection of real investor interest. It also factors in risk-adjusted momentum, sub-industry momentum relative to sector peers, and price standard deviation. So instead of manually piecing together whether volume is confirming a trend across dozens of charts, you can get a fast data-driven read on momentum already incorporating volume right on any stock's quote page on WallStreetZen.com. So again, if I go to this page here and I look up Micron Technology, it's rated as a strong buy. If you go down to the component grades, it says momentum is at a B. That means it has strong momentum behind it. So if you're looking at a chart and it's showing you volume divergence, checking the momentum grade gives you a second opinion backed by 22 factors, not just your eyes on one single chart. Like I said, the momentum grade is just one part of what makes up the entire Zen rating. Together, these metrics are actually powerful. Now, if you want to see the results, click the link in the description below or scan the QR code here, and we'll actually send you a free report featuring 3 stocks we located within the system that have double or more upside potential in the coming year. And again, you can grab it for free right here. All right, so here's how to put all this into a repeatable process on any chart. Once again, I'm going to be using TradingView here, but you can use the platform of your choice. So step 1 is just zoom out and figure out what level you want to be looking at. I like to look at daily charts, but you can also go down to weekly so you can actually see better what patterns are emerging. Now, what you want to look at is the overall volume increasing or decreasing? Are there any unusual spikes in recent history? You need this context before looking at individual candles. So you can see here, if I zoom out a bit, it seems like the volume is increasing on this stock. Now, step 2 is to zoom into key levels. And this is going to be your drawing support and resistance lines. So if I go here, I'm just going to grab a line and I see some resistance right around here. And then I see support right around here. So now that we have these lines in place, we can see what's going on and relate it to the volume. Again, we're going to apply that effort versus result process to see what happens when the price approaches these key levels. Now, if you see a volume spike of resistance and there's a small candle, that means the wall is holding. This is absorption. Now, if there's a big candle breaking through resistance with very high volume, that means it's a genuine breakout here. But If the price is breaking through resistance, for example, right here, and the volume is low, this could be a trap. You should treat it as a trap until proven otherwise. Now, step 3 is you have to wait for confirmation. So we do have a breakout here. What we need to do is at least wait for the next candle. So for this would be tomorrow's candle. Does the price pull back to a broken level with low volume here? That's a no supply test. That's your confirmation. Now, patience for one extra candle can prevent a lot of losing trades. So if you take those 3 steps and you be patient to figure out the setup, you have confirmation of what's going on by using volume analysis. All right, now you know how to run a volume analysis. Run these 5 questions before every single trade. Number 1 is volume increasing or decreasing compared to recent bars on the chart? Number 2, does the effort match the result? If not, who is absorbing that trade? Number 3, are there unusual volume spikes near key support or resistance levels? Number 4 is volume diverging from the price? New highs on lower volume is a warning, for example. And number 5 is what does the next candle confirm? Never act on a single candle alone. And when you ask these questions before every trade, you stop guessing and you start reading the chart properly. Price can be pushed around by headlines and emotions in the short term, but volume reveals where real money is actually stepping in. It's the truth serum of the market. Okay, listen, if you take one thing from this video, make it effort versus result. Every chart, every candle, does the effort match the result? That question alone will change how you read price action on a chart. And if watching this video made you think you might need a refresher on how to use stock charts, check out my video on how to read a stock chart right here where I break everything down.